JB here. Hope everyone's doing outstanding. May 1st, 2024. Just gonna be really quick. It's gonna be about 6 minute quick rant. Talk about the markets, talk about some of the names I am in, some I'm looking at, talk about the Fed really quick. Go from there. Take a look at a SPY down over 1.5% to end the month of April. Worst month since October. 2 consecutive months to the downside. S&P closed down 4% for April, and so did the Nasdaq. And now we get into that traditional, you heard it over the years all the time, sell in May and go away, a traditionally lackluster time frame where typically you can sell all your stocks in May and then come back and buy them in the fall at lower prices. And that rarely comes to fruition, but it is a historically weaker time frame. Hopefully, I was looking yesterday when I was on the rant, the SPY was still above 504.50. We were chopping around there. I was hoping it was going to hold. It didn't. I think we need to get above that in the next day or two. Otherwise, I fear that we're going to head right back to those lows that we hit in the middle of April. 487 or so is the first line in the sand. If we get there, I was looking at some hedges. I'll talk about that in a second. Hopefully that's not the case. There are some glimmers of hope. The first, that 50-day moving average on the names on the S&P, which I've been watching for the last 2 weeks. Still ticked down yesterday, but you would think it would have been more with that big decline of 1.4% or so and over 2% on NASDAQ. Did not happen. So, I didn't get under 40%. It's getting close. So we'll have to see how today goes. Hopefully that starts to trend back up. And then the VIX. Another muted move for the VIX. And again, this morning, despite the futures being lower and small caps actually just went green, or at least the small cap futures, the VIX it's at 16 here, up to 2.6%. So if that's it, it was a very good indicator when we had the bigger move in the middle of April. Still, it's not showing signs. Maybe at some point it will, but I guess that's my glimmer of hope. Today also is the largest implied move on the S&P for a Fed day since May of last year. So take that with a grain of salt. Could be up or down. Doesn't it's just the at the money straddle. So hopefully find some footing here. The VIX holds its, say 16, maybe back into the 15s, and we can start getting constructive here. At least hold into the Fed meeting, and then Powell can alleviate some of the concerns, and we can move, maybe recoup some of yesterday's losses. Some of the names. So, of course, I'll talk really quick about VKTX. It was a great slide. Semido. There's two people at Farmer Doc and Semido that I follow on FinTwit. Messaged them a lot over the last couple of years over many stocks. This is the one that obviously has done very well. Nice little slide he put on. I always talk about these mega cap names that are looking for an asset, a GLP-1 asset. You look at names like Johnson & Johnson, AbbVie, Novartis, however you pronounce that. You also have Gilead, which they actually, I believe they acquired assets, two small cap assets a long time ago, back when I was following Intercept. But those, I guess they had their studies failed. So you can see all these names that still are looking for assets in huge market caps, right? AbbVie, Novartis, $245 billion market cap. Johnson & Johnson, $365 billion. So you would have to think they have cash on the sidelines. 7 straight days to the upside for VKTX. Finally seeing those candles. Broke over 80 right near the end of the session before pulling back. Locked some of my June strikes in just to cover costs and have a little profit there. And I'll probably look for some further out of money strikes today or tomorrow, depending on how it trades. Because I think if there's an acquisition, it's 150 or so or higher. So I'll look for something similar to play for that, as well as the NASH data, which will be out any time in the next 6 weeks. Well, actually 8 weeks, right? Because the start of May, June. Yeah, June is the end of the second quarter. Not much to add here on the cannabis names. You watched the news last night and this morning. One of the headlines is about this reclassifying of cannabis to a less dangerous drug. I was surprised when I was on the rant. Well, I was doing my rant in the afternoon. CGC was 11, went all the way up to $15. A lot of this has already been out there, right? I mean, it wasn't like this was a surprise move. It's just that it's coming to fruition. And like I've said yesterday and over the course of the last couple months, as I've been in CGC and ACB, is that this has been a long time coming for these names. They've been planning for it. So it's just such a good thing. And then once it gets reclassified, it also allows tax benefits. It's going to help with profits. The banking sector bill is supposedly going through by Chuck Schumer. I guess he's been working on it. So if all that stuff goes in, it just bodes well for some of these names, especially CGC, ACB. So I locked some more of my CGCs in for over 400% yesterday. I'll probably just hold those and then maybe some ACBs, depending on where it goes. My call's finally back into the green. I'll probably just hold on to those for now. I'm not going to add anything just because they've been nice cash machines over the last couple months, but just a great story. The one I might look to add on is IIPR. It's more of an under the radar name when you're looking at names to play for the cannabis space, because it's like the company that's going to get all the benefit. It doesn't have all that risk of a individual company, right? It's just a REIT. It's just doing real estate. It's going to make more money because there's going to be people for looking for solutions through them. So just a great company. I think they report earnings next week, which is not really a big deal. We're not close to the ex-divvy date. I think that's in June sometime. I have to take a look because they have a large dividend. So when there's an ex-divvy and you're holding a stock that might have a $2 dividend, it obviously the calls look less expensive, so you got to be careful with that. So I'll be watching that, but I'm definitely going to have my eyes on possibly adding more strikes and hopefully getting the opportunity to lock some of my May strikes in to cover costs for over 100%. So that's IIPR. I just wrote it on the watch list before. They'll be out in a second. But Roku, disappointing. So you had that partnership with TTD in regards to the advertising. I thought that was it. There's going to be the bottom. The earnings kind of shook everybody out. And they had a great report. Stock all the way up into the 61s, and then just gave it all back, especially with the market melting, kind of sold off in sympathy. Hopefully find some footing. 50-day moving average on Roku, 62.38. It hasn't been over its 50 days since the middle of February. So not saying it's going to head to 80, 90, and 100 and above, but I think there's an opportunity to play for upside. Not sure I'll add anything more just yet, but if it does find some footing, maybe once it breaks that 50 at 62.38, I'll look to get some June strikes. I think that's about it. CAVA, I'm going to keep my eyes on CAVA. It could overshoot. Wingstop reported a great quarter this morning. Wingstop was one of my top 5 stocks back in the day when it was like 70 or 80 bucks. I think it was COVID days. Here it is sitting at almost 400 bucks. Great story. But people look at Wingstop and they say, wow, look at the multiples. How's this trade like this? All they do is sell wings. There's no motor around their business, but it continues to perform well. Huge beat and raise. They're opening 295 new chains. That growth story continues. So I'm not saying CAVA doesn't have an opportunity to move higher. It's just its multiples are totally different. When I looked at Wingstop, and Wingstop does a lot of franchising, so it's a little harder to wrap your head around the financials, similar to Domino's Pizza, because a lot of it's most of the franchise is not corporate owned, so it's very hard to get the numbers right and to value the company right. So which makes Wingstop, people look at it top line just at first glance and say, wow, this is totally overvalued. And meanwhile, it just keeps going. But I'll keep watching CAVA because even though the multiples are insane, it could overshoot. It could have momentum. There's positive articles on it. People always look as the baby CMG, and well, not always because it's a pretty recent IPO. So we'll be watching that one. Some of the names with earnings, Amazon picked the wrong day, report earnings, monster quarter, huge cloud beat, which typically bodes well for MDB and other names. And MDB is actually gapping higher this morning. But Amazon would probably be up a heck of a lot more if it wasn't a red session yesterday and today. Take a look at AMD as well, trading off $9, and that was on strong earnings and great guidance. But the guidance, they're concerned that the lower end of the guidance is too low or something like that. So I don't get that. SMCI down over $100. Again, strong, huge growth, like 200% revenue, 300% earnings. But then they talked about CapEx, right? And it's in order to get scale, you need to spend money. They did their offerings, they're going to spend money. So people, they don't like people spending money, right? They want profits. So I think that's some of it, but that probably comes back to life. I'm not sure if I'll trade it because the premium is going to be crazy on SMCI, but definitely one to watch. And then last but not least, and I was talking about yesterday, the hedge plays, always be hedging. If the markets can't find footing today, maybe back to 498 or so, I'll probably look for some hedge puts. I was looking at AVGO yesterday, but the premiums are expensive. Lamb Research, another name. MDB with that Amazon news, maybe MDB is not going to be a good hedge play because it probably finds some footing. Same with Snow. Snow might be interesting today on that Amazon beat. After the close today, too, earnings, we have Carvana, Qualcomm, Etsy, DoorDash, Fastly. I know there's a lot of folks, I get some messages, and I've seen on FinTwit too with Carvana, there's insider buys. That is such a divisive name. I try not to wrap my head around. I mean, would it go to 300? No, $20 up to 300, back to 20 bucks, whatever, or even lower that. Now back up to 90. Hard one to hold. And I remember many years ago when it first started really getting volatile, it would be like Morgan Stanley would have a sell rating and a $20 price target, and then Goldman Sachs would have a buy rating and a $120 price target, and the stock was at 50 bucks. It just goes to show you, like, it's like they're looking at two different companies. And that's why it trades so volatile. And that's why it has these wide swings. I'm big about things that disrupt industries and sectors. And the car selling experience is one of those that needs to be disrupted. You see with Tesla, the hurdles they had to go through to be able to sell cars and to not have dealerships, right? I mean, how does that make sense? It's just archaic stuff. It's pretty much like if you go to New Jersey and you're trying to pump gas for yourself and they have attendants that are forced to pump your gas like they're doing surgery on your car. It's the craziest thing, but these are archaic things that allow these companies, I'm not saying allow them to exist. Salespeople and car industry, that's great. Some of them, if you hustle, you do great. It's a similar real estate agents, you make tons of money, but I don't get how the car selling experience hasn't been disrupted to the point where the horrible experience of a dealership is removed, right? Rants for other days. So that's why it gets tough for me to get puts on Carvana or even get the calls because it's such a divisive name. Even if it beats and raises, it could still sell off. But that's my thoughts there. Let's have a great day, folks. We got 2 minutes, 2 minutes to 9 o'clock. This will be up on the blog in a couple minutes. Rock and roll.